Okay, a different convention also can apply to depreciating tangible property too. It's called the mid-quarter convention. So whereas the half-year convention says you get a half year's depreciation in the first year of an asset's life and the last year, or any year you dispose of the asset, the mid-quarter convention says that in certain cases you have to treat all your assets as if they were purchased in the middle of the quarter that they were actually purchased in. And the reason why this exists is because companies started taking advantage of the half year convention by buying a lot of assets late in the year and being able to get a half year's depreciation deduction for it. So now they say if a company spends or if more than 40% of a company's tangible property was put in service in the fourth quarter, then this mid quarter convention applies to all assets purchased throughout the year. Okay, so read through this a little bit, and you're going to use different tables when mid quarter convention applies. See table 5.2. Depreciation for real estate, we have a mid-month convention for real estate. This is basically saying that the real estate is deemed placed in service in the middle of the month that it was actually placed in service. So if you bought a building on June 7th, it's deemed to be placed in service on June 15th. You also use straight line only. There's no accelerated depreciation for real estate. So if you have that, June 15th placed the effective date of when you bought a building, then for the rest of the year you take depreciation straight line based on the number of months from that period forward. So that would be 6.5 months of depreciation. So look through those examples and try and follow along. You kind of like straight line even if you qualify for double declining balance method. Leasehold improvement property. So this is when you lease a building. You don't own it, but you need to use it, so you lease it from a lessor, and then you make improvements to it. You get to depreciate those improvements, but then when you then leave those improvements with the owner. So you take a loss deduction then when you're done with that property, because you have no right typically to get those assets back because they're fixed to the property. Kind of like the additional first-year depreciation allowance that you can take the government put in service to or put in effect to promote companies spending money on investing in themselves. There's also the Section 179 idea that allows companies. It's been around a lot longer than the additional expensing option, but it allows companies to deduct up to $500,000 in these 2 years, up to $500,000 in acquisition costs of tangible personal property. There are some limitations on that. It's geared toward mid-sized companies. So if you place in service more than, here's the limitations right here, more than $2 million, then you're going to be limited. That $500,000 amount will go down dollar for dollar. You also have a taxable income limitation, so 179 cannot put you into a tax loss position. So as long as you factor those in, you'll be okay there. So the general ordering of how you claim depreciation deductions on tangible property is: first, you consider Section 179 deductibility, and these rules here. Second, you consider additional first-year depreciation, whether it's 50% or 100%. If it's 100, then you're done. And then third, if you have any basis or any cost left that isn't automatically deducted based on 179 or additional first year, then you can use the tables to calculate depreciation on the remaining basis. And the sum total of those three is the depreciation deduction, or the cost recovery deduction you get for assets that year. I think, there's also some rules for cars and other listed property. Listed property are types of assets that are typically used for both personal and business purposes. It's hard to separate them, like cell phones or computers or cars. So they limit deductibility for these things to certain amounts per year. So read through this. It's not going to be a major topic on homework and tests, but you might see a question regarding these limitations. And I'll finish up on the next video.